Yo, yo, what's going on, guys? It's Goose from the Wise Wealth Discord, coming back at you with another watch list for the week ahead. As you can see, we got that bounce that we were stating in the Discord earlier in the week. Where we at? Where we at? Let's go up right here. Pretty muted reaction. We are starting to get pretty overstretched to the downside. Just like I always explain to you guys, it's like the rubber band effect. Just like when we were up in the air and the RSIs are overbought, it tends to come down. That's exactly what we've been getting. It's that downward action. But there's a lot of uncertainty. Most major stocks are at levels you'd expect to bounce. That's what we're going to be looking over on this Monday morning. If we flush more, going to trigger more sell side action. Couldn't quite get there. And then I said, I'm surprised we haven't seen a significant retracement or a little rally from the bulls. I'd assume coming soon. And that's exactly where we're at now. We got that bounce. You start to see those divergences. There's plenty of divergences on every chart. You can see SPY right here. It diverged. It created that lower low. But on the RSI, it creates that higher high. So when you start to get these oversold readings on the RSI and a divergence, it's usually signaling that there's probably going to be a bounce soon. But QQQ was diverging for a while. It was starting to stretch. Finally went and touched its support. You can see in the longer term, this is going to be the line in the sand. Resistance, support, and it comes down, finds buyers, get the resistance or get the divergence, and then the oversold area on the RSI, and then lo and behold, you get the bounce. So now the big question is this going to create that lower high and go for another leg lower, go touch the 200-day moving average? Or was that just a huge bear trap and now we're going to send it right back to all-time highs? That you still got to build some structure out. I will say these rallies are fierce. As you can see, we're up 0.66 from those Friday lows that we had. So I mean, well, from Friday lows, we're up a lot higher on SPY, QQQ, IWM. IWM, same thing. Divergence down below. It's creating these lower lows. It's in a falling wedge. But then you get this oversold reading. You diverge again. Boom, bounce. Them, they're a little bit, not as good because they're below their 200, below their 50, below this bear flag that they had. So IWM looks the weakest out of all of them. I do truly think that the job numbers this week are going to be rough. We have manufacturing that hasn't been that great, but it's starting to turn around a little bit. So we'll see how it plays out. But like, I don't think this data here, like the non-farm, that might be a little different. The non-farm, because that's an employment thing, but it's about the job numbers, unemployment claims, unemployment rate. Chair Powell speaks. He's going to be speaking in Chicago. It says economic outlook at the University of Chicago Booth School of Business. So we'll see if he says anything crazy. It is the economic outlook. So if he says, he sees slowing down or he sees some roughness, then people might get scared out of their positions. Not sure, but that's kind of how I plan on playing it. I know we're getting this bounce now, but it's obviously been super bearish. It's just, resetting these RSIs. But that daily is pretty nice. We could definitely retest, this 513, 515 area, and that could be, the level we go lower. Or we start to build structure, create a higher low down here, and then come back, test the 50-day, and get the 522 stretch. That I don't know how far it's going to stretch, but I do feel like we're going to get a bounce, this Monday, first day of the trading month in March, usually a bullish thing. And then ultimately by Wednesday, Thursday, when those job numbers come out and they look weak because of the Doge effect, I believe we're going to be sent lower. That's just my personal opinion. It doesn't have to play out like that, but that's the bias I'm leaning to. I'm always willing to change sides if things start to, if they do mount the 50-day moving average on SPY, get above that 600, break retest, then we can be gone for all-time highs. There's not much, going on here. There will be a decent amount of resistance around 605 after we break 600. But just keep your head on a swivel. When you're in a bear, like, I'm not saying it's a bear market. It's definitely not. You got to be down 20%. But a bear controlled market is usually fierce, rips up to the upside, and then a huge, rug pull. It just goes down and breaks these lows. If we get below these lows, then most likely we're going to test the 200-day moving average on the SPY, the Qs, but we're holding the ultimate support. It came down and we're holding this level. We're diverging. So momentum was weakening, but we'll see what happens if the retracement does get up to the 522 on Qs, or the retracement does get above 600. Those are the levels that you want to be watching above, because you're aware that these don't look very good. You look at, like, let's say the daily. There's a three crow, thing, three black crows, where it's like a full body candle and closes below, the previous day's lows. That's a very bearish like thing. And then you have the inside day and a huge sell. So it's like, obviously we're going to start to pick up, some buyers are like, oh crap, panic buy, buy, buy. It's going to squeeze some shorts out, but shorts are going to be very present around these levels. They're not going to want to give up these 522s, let alone all-time highs around 540. And then you can see that, in these numbers, they're going to be slowing down because they're trying to bring inflation down. They're trying to bring that 10-year down. So they're cutting drops drastically. They're taking a lot of liquidity out of the market from government spend and unemployment claims, and those type of numbers are going to be affected when you're firing hundreds of thousands of people. It's going to be a drastic jump just like that. So with that said, we'll go dive into more equities, but I think we go lower by the end of the week, or we start to get that sell off again, but we're in the middle of a bounce. So you want to be patient if you are thinking about going short, but you want to be receptive to the fact that if we start to break above the 50 and we start to mount, 600, this very well could just be a bear trap. And we go right back to all-time highs because we're in range. We find support here, and then where does it sell off? 610. QQQ, we found support at the 500 level. Do we go test 540 again? Go see what we can get up there and then sell it back down? You don't know that. So that's why you want to treat it like water, and what it tells you is what it tells you. But personally, I think we're going to go for another leg lower just later in the week. I think Monday, Tuesday, Wednesday could potentially chop, be a little bit up, and then ultimately find sellers once job numbers come. So Apple, they're above their 50-day. You can see this very bullish push. I mean, that's a very good candle by the bulls there. They get below the 50, but they eventually breach it. You still want to see above 250 for any like true momentum going on. But you have the higher high, higher low, higher high, higher low. And now it's like, is it going to go test that higher high and get above 250, 260? We'll have to wait and see. But that'll be a big tailwind just for QQQ if it starts to move. Microsoft, it did lose below that 400. I was saying watch out for that support. And you did get a little bit of sell side after we lost the 400. You could see like it was consolidating around 400. Boom, lost it. More sell side. But is this a bear trap? Is this just the bears scaring everyone off? Just a simple consolidation move out of most stocks? That I can't tell yet, but I do think there's more sell side to it too. I've been saying for the past 3 weeks leading up to like these sell side signals, divergence, it feels like the shoe's going to drop. There's low volume. Now we're starting to get higher volume, and it's sending it to the downside. So that kind of tells you some things about some of the participants right now and what they're trying to do. But it's happened before where value goes up on the sell side, and then boom, they buy up the dip and it just rallies up. You don't have to have significant volume to move, just like you've seen, 3-4 weeks ago when we're breaching all-time highs. But the divergence on the video played out here, and now we're diverging again. You can see on the 4-hour. Let me go to the 1 hour. You're creating 1 hour isn't as bad, but right here from here to here, look at where this lines up. It's creating that higher high, higher low situation on the RSI. But on the chart, it's a lower high. It goes down for that leg lower. So that's showing the divergence. And when you get divergence, you get support, and you have the RSI, reflecting that, or like reflecting an oversold. That's typically where you're going to find your bounces. This is how I usually play bounces. Is like this bounce down here was fantastic from NVIDIA. And most likely this would be a pretty good rally if it can sustain. I said watch the EMAs above. You're below the 200. That's not good for semiconductors. So go test this 126.70 area if we could speak. And then, if we get above the 50, then yeah, things are starting to look very bullish. Things are turning around. That's just not the bias I have right now, but I'm receptive if that does happen. It happens, and we'll be completely ready for that. But yeah, watch above the 127 for Nvidia. If it does start to break above that, test that 50-day moving average of 133.50, and we'll have to wait and see if it does get denied. Ultimately, it has been kind of waning down. I know you got the divergence on a major support, so you're going to get that bounce, but how far, how steep, I don't know. They're a leader right now in the pre-market. Tesla always, especially when it comes to short squeezes, is known to be great at it. You get one of the Mag 7 stocks like Tesla at a 200-day moving average, you're going to find buyers. If you're a long-term investor, that's a great point to be dollar cost averaging in. You don't want to be buying in these levels. When everyone's greedy and it goes up, 75%, yes, you can play options the whole way. I know Jimmy was smacking options with Tesla. All you have to do is wait for the break above previous day highs, and they're moving. And when you're squeezing, that's awesome, but don't be like a huge accumulator after like a 70, 100% move. But when it comes down 30%, then everyone's scared. No one wants to buy. And it's the same thing where I was buying in the 200 level of Tesla. Everyone wanted to buy it in the 4 or 500 level. Like, yeah, let's get Tesla. And now that it's back down here, to me, that's a blessing. I truly think that Tesla's going to be worth more than what it is now if you think in 10, 20 years down the road. So I don't have an issue with putting some of my checks aside and some of my paycheck money from work. As you know, most of you guys know I'm a UPS driver. So you put money into assets. You put money that will work for you into companies you believe that will continue to grow. So even in these moments of people being scared, the market may be correcting down 10%. You have to understand that Meta, Tesla, like these are very good companies, especially Meta. If they turn into AI and they just have their business model just using that, they're not worried about tariffs. Nothing Meta does or produces has much to do with tariffs overseas. So it's like there are companies out there that still won't be affected by certain policy, the addiction rate of reels and stuff like that. If you don't believe in Meta, I don't understand your thesis, to be honest. I think that's probably one of the best long term companies you could buy. So when you see it around the 50, or if it does break below and we have this big sell off, do not be scared. That is the moment you want to be, starting to get a little bit more aggressive. And that's why I never really am concerned about a big sell off. A lot of people get scared. I'm like, thank you. Thank you for a discount. I appreciate that. That's what I want. I want cheaper companies. I want Meta's PE to come down. I want Tesla to come down so I could be buying at these levels, not at all time highs. And that's the type of mindset that you're going to want, like overall as an investor. But you can see Meta holding its 50. There's still a big support down here. Like I said, we're due for a bounce. It had that double bottom on the 50. Can you work your way above, the 700 area? That's kind of the level I'm looking at. Pretty much just a lot of, action going on around that 700. So we'll see. But overall, I do think we go for another leg lower. I know things start to look like they're bouncing. If we do go to all-time highs, I mean, that's crazy. But it's very, very possible. We're just in this downtrend channel. Tesla needs to get above this ultimate trend that it lost. If it slingshots above 307, 330 is going to be pretty possible. But that's going to be the next level of resistance. You can see that it tried to hold it as support around that 330 area. So if it gets up into this area, that could be the sell side, I think, for another leg lower. Nvidia, if the bias plays out, is either the 200 or the 50, maybe even in between. Sometimes they like to chill out in there until we see that next leg lower. And if these supports that I'm showing you on these major stocks, say Microsoft 400, Nvidia below, 118, 115, Tesla below its 200-day moving average, Apple gets below its 50 and creates another leg lower to the 233. That's going to be the same thing for the Qs to head lower and lose its 500. So be careful and kind of put those two and two together, that if you start to see Apple, Nvidia, and all those, and QQQ hasn't caught up, most likely they're going to go test their 200-day moving average. You can see that they're above but you check NVIDIA out and they're below, that's not good. That's not a good sign for the QQQs and where they're possibly heading. I don't want to be a super bearish guy. You guys know I try and keep an open mind. I'm still receptive to the fact that we go up, but I think we have another leg lower. I think. I'm not 1,000%, but you can see it in the charts. AMD below 99. It's just a crap stock. I used to try and hype AMD. I'm not gonna lie, but when you really do your own research and due diligence, it's not the best company when it comes to AI. You have AVGO, you have ARM, you have NVIDIA, much more attractive PEs and actual like successful